Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Dan Deming, Managing Partner at KKM Financial, to discuss pressure on volatility expectations as realized vol continues to remain low in this environment. Dan, it's great to see you. Welcome back to Trade Talks. And before we get into volatility, let's talk about the key indices, the Nasdaq 100 and S&P 500. What are your thoughts around how it's performing technically?
Well, right now, Jill, we're at a key technical level on both those indices. And you look at the 50-day moving average. We got the Nasdaq just slightly above its 50-day moving average. So from a relative strength standpoint, it stands in a better position than the other three majors. But the S&P just below its 50-day moving average. So those are the two keys that I'm looking at as far as the two major averages. The Dow and the Russell are below their 50-day moving averages. And we look at the Russell, it's actually teetering on its 200-day moving average. So really, to me right now, the strength of the market is still in the Nasdaq area and then the S&P sector.
Yeah, it seems like the Russell 2000, it's been a false start. That really has kind of been the narrative with that particular index. Let's talk about volatility expectations, because even though we've seen it creep back in to at least start off September, it still seems to be pretty low for this environment.
It is, but I think, Jill, if you look back at just the price action over the last several months, we're in the middle of the range, particularly when you look at the S&P 500. Really, from the middle of June till now, we're pretty much right in the middle of that range. And to me, that's where market makers and market participants are taking their cues, that we just haven't broken out of this range that we've been in throughout the second half of the summer. And I think that's the driving factor as to why we're seeing implied volatility as measured by the VIX remaining low, because we're just not realizing that significant volatility throughout the summer. And even with the selling pressure in early September, it's not enough to break us out of the range.
Do you think September psychology is what's influencing the markets to start the month the way that they have?
I think so. I think that's why the markets had a difficult time hanging on to any kind of significant upside momentum because of the fact that, I think valuations were being called into question coming into September. And as we open the month on the down note, then that psychology kind of shifts the sentiment in the market. And I think that's another driving factor. Next week will be a key week for the markets, Joe, because we do have a triple expiration and this market weakness. So we'll see. That could shake things up and break us out of the range, which would impact the VIX.
We also have a lot of data points coming out next week as well when you think about the macro environment.
Yeah, several data points that are going to influence the vol structure, starting with CPI, then PPI, and retail sales right in the middle of the week. Now, the one thing that we don't have next week, Jill, is the Fed. The Fed will be in their quiet period. So really, it's going to be incumbent upon the market to try to hang on to these levels through expiration and through those data points.
All right. We appreciate the insight. As always, Dan, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.